Hi, everybody. Welcome back to Mondays with Mike. Hope you had a great Halloween. I know it was a little bit different one this year. And speaking of that, so it's the day before Election Day this Monday. I know that that's probably on a lot of people's minds. So I'm going to focus my topic on how the election uh, may impact the real estate market. And this is not a political message; has nothing to do with who wins. Obviously, in every cycle, there's going to be some difference between how the incumbent administration governs and how possible replacement administration will govern, and it's going to impact business, the economy, and real estate. I don't expect the impact to be as immediate as it will be on the stock market. Some of the more liquid, faster moving markets will be impacted probably tomorrow and into the rest of the week. Even if it's a protracted count, where we don't know who the president is tomorrow night or even Wednesday, I think that the real estate market, it's going to take a little bit longer for it to be noticed. And why is that? Because things just don't close the day that they're put on the market, right? If anything, what we've been seeing is a hesitancy to go on the market, or maybe a hesitancy to enter into a transaction. And the data bears this out. So the best source that I found, national source, not too much locally, so this is not local to the New York tri-state area, uh, but BTIG, which is a research and analysis company, did a great study from 1963 to 2019 on the 4-year presidential election years. They took a look at the numbers, and whereas in most years, change from October to November is a negative 9.8% difference, that's probably seasonality playing in there. It slows down the market naturally. We've talked in previous episodes of Mondays with Mike how this year is different. So I don't think I don't think we have that 9.8% deceleration in the home sale market. But in election years where there's a where there's a presidential election, we actually see a negative 15% slowdown. And that's because of all the uncertainty. So I think that with this being a more highly contested election, let's say, with more people voting early and seemingly having a much bigger stake in the outcome, I do expect that we may see a sharper decrease than 15% this year. However, most of the other studies, including this one, but there's another one by Myers Research, and Zonda is the name of the company, they all found that the sales weren't lost, right? They just get deferred. So any slowdown that we see in November, I would expect would be made up, maybe not necessarily in December, but December, January, February, which typically in most non-election years are actually slower months. We should see some of those sales come back on the market, with buyers not sitting on the fence for too long, and with sellers doing the same, coming to market if they wish to come to market. Again, I'm going to keep it really brief. I think that where I come out on this, and where I think most of the experts who I've read come out on this, is we've got mortgage rates near all-time lows. The economy is still trying to recover, and the same with unemployment. If those things continue to rise, no matter who is in charge, no matter which administration is there, if we continue to see improvements in those areas, housing should remain strong. The coronavirus impact was far greater than what we've seen as far as uncertainty surrounding the election. So I would like to think we've already been through the absolute worst as far as surprises, and to call it a wrench in the machinery is an understatement, obviously. I don't think we panic. Let's see what happens. We're certainly here to deal with whatever the outcome is, and however it impacts the real estate market. And as always, happy to hear from you with topics and thoughts. See you after the election. Take care.